Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge. Thanks so much for joining me. I absolutely love being here with you. Hopefully you're off to a great start of your Tuesday. Why? Because it is terrific Tuesday. We love Tuesdays. That means there's just 4 days left to go till we get to Fun Day Friday, if you will. So, folks, you can always watch us on TigerTV. For everyone listening on the radio, we absolutely appreciate it very much. Thanks so much for doing so. For those, and you can always catch the archive of this show on Channel 9. You know, the archive of this show is on Channel 9. The Money Masters show that Tom and I do from 10 to 11 o'clock. You can catch the archive of that on Channel 10. So if you're listening in and we're taking a look at a chart, because I'm absolutely going to teach you something today. You know, we sent out an email yesterday, last evening. You may have gotten that email. Maybe it was in your junk box. So you're going to take I suggest that you go take a look at it. It's about a 6-minute video. You know, I show you something. What was actually very cool yesterday, Marvelous Monday was absolutely a cool day for me for a number of reasons. But the most important reason was because when Tom and I were doing the Money Master show, and I talk about things, and, the thing that sometimes we do in life is we just make assumptions. And so I assume that some of the things that I was talking about when I take a look at some of the charting tools that I used here, that, just accepted that Tom knew exactly what I was talking about. Well, there was a light bulb that absolutely went off in Tom's mind. In fact, and his exact words were something to the effect, I guess I won't say the exact words, but his words were that it's the first light bulb when it comes to technical trading that has gone off in his mind in the last 2 to 3 years. And that technical thing that we're looking at is understanding the C to D of an ABC move. And so there's a video I sent out. I wanted to share that with you and show you an example of that. I show you a trade setup in EXM. We'll take a look at that today. We're going to take a look at my screen so you can catch the archive of today's show on Channel 9 or any of the other ones as well. I think they keep about 5 or 6 of those shows up there, just simply because of all the content, all the video that's there. So check that out, and also go check out that email. Go scour for it if you haven't had a chance to look at it. It's a great 6 minutes of time, just like the next several hours today are going to be great uses of your time. After this show, you've got Tom and I doing the Money Master show. Then we got Kate Stalter doing the small cap roundup. Then we go out to, so we're going to go from Santa Fe up to Chicago, I believe, where we'll catch Victor Jones doing the options hour, commercial uninterrupted. Then from 3 to 4, the warm-up band for the Tom O'Brien show today is Ken Shreve, and then Tom from 4 to 6. Our call number is 877-927-6648. Dow futures relatively flat. ES Mini is trading out at 1374.25. Just keeps trying to pound that 1375 area. Can't bust it down. We'll see what it's going to do today. NASDAQ futures up just slightly. Russell futures relatively flat. So as long as they're water skiing out here, yesterday I talked about just simply how remarkable each of you are out there. One of the things that we have as human beings, the uniqueness that each of us have, is just simply being remarkable. And the reason that we came up with it happened to just simply be a result of a post that was inside the Tiger's Den. When I've got a number of screens that are in here where I'm just watching a number of things that are going on. One of those is sometimes the input from the folks in our Tigers, and that is our TFNN peer group, folks, and you absolutely should check that out. Go to the homepage of TFNN. You can test drive that for 30 days for free. Now, somebody posted something about Bubba Watson's win at the Masters on Sunday, but most important was just simply what I thought was an absolutely remarkable shot. So I just simply yesterday talked about just simply how remarkable each of us as human beings are. I mean, we absolutely can accomplish anything. We can turn the impossible possible, but being remarkable, folks, that means that, what you've been able to do in your life, you can take the worst set of circumstances and turn them into the best set of circumstances. That's what Bubba Watson absolutely did at the Masters. You can find people that can turn pennies into thousands, into hundreds of thousands, into millions of dollars. Folks do it all the time. That's why you are remarkable out there. Now, what are the things that can stop you dead in your tracks? Those are called fears, if you were, because you can kind of, we're all born. I don't know that any of us are really born with courage, right? When I take a look at the master, I take a look at what each of us have to face, take a look at the markets. We're going to take a look at fear and greed in the markets, because that's what these A, B, C, D patterns do. That's what these retracement or expansion patterns do. They're just simply measured by math, and we can show you that to you time and time again. But there's basically 5 fears. Now, what I'll call 5 enemies, because there's really only 2 basic fears that stop you from doing what it is you want to do. That's simply the fear of not being loved or the fear of loss. Well, and we understand when it comes to money, those are 2 real big fears. But there's enemies inside there, right? Because you're always fighting these little battles. Well, one of those 5 battles, folks, they deal with things like indifference. I'll give you 5 words: indifference, indecision, doubt, worry, and being overcautious. Those are 5 little enemies that you've got to deal with on a day-in, day-out basis. You do that when you're taking a look at the markets here. Indifference, folks, that's just simply drifting along. And what we know about is that you can't drift your way to the top of the mountain. Even though the markets may do it, and they drift up there, when they drift up there on lighter volume, when that rug gets pulled, folks, what it's going to do, it's going to come down to a volume bar. We take a look at that day in, day out. When we take a look at the stocks that are popping and dropping, we do that each day after the market opens here at 9:30ish, and we can go take a look at those that are dropping. They'll always drop back to a high volume area or very close to it, and that's where their target is. Well, so indifference. You don't want to have indifference in your life, and that then leads to indecision. That's really our second opportunity, our second, what I'll call enemy, if you will. And that enemy, folks, with that indecision, it steals your chances for a better future. So what you want to do is you want to take out your sword, you want to axe that, you want to get rid of indecision. When we take a look at the markets here, I'll show you, and what I've got up on my screen here right now, let's just switch over to my screen here, because we can always talk about those other 5 enemies or the rest of the 5 enemies. Maybe we'll do it today or maybe we'll do it tomorrow. But indifference, indecision, and this really ties out to the video that I sent. This was the light bulb that went off in Tom's mind yesterday. And what I have up on the screen here right now is just simply a 10-minute chart. It's a 10-minute chart of the euro US dollar. Now, the reason why I've got a 10-minute chart is we're early in the trading session. These patterns here, they work on any time frame. So it's much easier for me to show you how they set up on a shorter term time frame versus a daily, because then we'd have to really wait for them to complete. And that's oftentimes what it is that we're doing when we're taking a look at the markets. Well, take a look at the euro US dollar 10-minute chart out here. And look at the first. I've got 2 A to B equals CD patterns that are out there. One is an AB equals CD up. One is an AB equals CD down. Why? Because markets go up and down. They breathe backward and forward. They backfill. They upfill. And so if we take a look at this one here, we're going to take a look at the ABC pattern that began at 2140. So you do the math on that. That would be 9:40 in the evening on April the 8th. And the low on that is 1.30465. It makes a B point. A B point, folks, is where it moves up, and you just simply make a change in trend here. Well, that change in trend takes place right here at 3:40 in the morning on April the 9th. So that was yesterday. So the euro moves up to that point, and then starts to move down. It moves down into a C point here. Now, we're not going to take a look at retracements or anything right here. We're just going to focus on one technique, and that is the ABCD patterns that are out here. So it makes its C point. It retraces back in the time frame of 9:20 yesterday morning, making a low out there of 1.30472. That sets up our C point. A 1-to-1 A to B equals C to D on my tool that I use here. This is my formation tool. Would have completed right here at the 1.31006, it looks like. So instead of 007, it's 006. That is, it says D right here. That's a 1-to-1. 60% of the time, you're going to see an A to B equals C to D complete at a 1-to-1 A to B equals C to D. That leaves you with the other 40% where it's going to do 1.272 or 1.618. It's going to do something different. So then you've got to decide, well, how is it you're going to determine, Steve, whether it's going to do, which one is it going to do? Is it going to do 1.272? Is it going to do 1.618? Well, folks, what you have to pay attention to is as you are coming off of this C point or during that C to D leg. That's the light bulb that went off in Tom's mind yesterday when he saw this, when I showed him this technique that I have been using for years here. And, folks, this technique is understanding how price is moving. Is it moving on the left side or is it moving on the right side? What do I mean by that? Well, this angle that you've got here from A to B, I maintain that exact same angle here, showing in this case here on the 1-to-1. You've got to just use your imagination and continue to draw that line. I could actually do it with the tool. But right here, when you start seeing price moving on the left side, it says the movement in C to D is stronger than the movement in that A to B leg. Well, if C to D is stronger than the movement in A to B, doesn't that just make some logical sense that your price is going to move higher? And so that's really what it is. Now, when you're attacking that D point, you start attacking that with some wide price spread. That's giving you another clue. So just using that one principle, folks, that will save you money. That'll help to keep you in a trade, help you exit a trade, help you understand when you're making a 1 to 1.618 that you're going to see a change in trend. Take a look at this. You were still moving on the inside track when you got past that 1.272. So what would that say to you? That's right. It would say, Steve-O, we're going to do a 1 to 1.618 AB equals CD. That would take you right up here to this 131, looks like 338. Where did it actually get up to? It gets up to a high of 131,327. Are you kidding me? How does it do that? It does that. It makes that 1 to 1.618, and then it backs off. Now let's take a look at on the downside here before we go to break, because here is the downside A to B equals C to D. Your A point right up here at 2310 on April 9th. Here's your B point. Here's your C point. You can see it. Look at price moving along the inside track here. What does that tell you? It tells you you're going to do a 1 to 1.272 or 1 to 1.618. What does the euro do? Another 1 to 1.618, folks. Absolutely love being here with you. 877-927-6648. We'll be right back.
Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. Back to the Trader's Edge, where we do battle with the enemy, folks. We do battle with our fears. We take our swords out. We cut right through them. We build our courage to fight those fears each and every day. We take a look at fears. We take a look at greed inside the marketplace, always measured by those retracement mathematical numbers, sacred geometry, and those expansion numbers. 618-786-1.272 and 1.618. What I've got up on the screen here right now is the ES Mini. This is the 60-minute time frame that we're taking a look at. And you take a look at the low that was put in after the results of the poor jobs report. I have to refresh the screen here every now and then. I don't know what is going on there. But as the jobs report number came out and the reaction from a marketplace standpoint, you had the ES Mini on trade down to a low. I wish I could tell you exactly what that low was. But it simply, when we came back in on Monday yesterday, you got down to a low of 13. There we go. So it trades down to a low on Friday of 1372. We actually got to a little bit lower low at about 11:30 at night. 10:30 at night, 21:30. What's that make it? That would make it 9:30 at night. Thank you very much for that math exercise. That would be at 1371.75. You can see right now it's trading out at 1374.75. Can't bust it down. Should have had all the energy that it needed, quite frankly, yesterday to continue moving down. If you don't take a quick look at the markets going around the world here right now, you've got the DAX trading off 77 points. That's trading out at 66.94. We'll definitely go take a look at that chart. The FTSE's off 59 points. You know, they were closed yesterday for the holiday. You had the Nikkei only down 8 points last night. You had the Shanghai up 21 points, up 21.28. They closed out at 24.15. You had the Hang Seng off 236 points last night. That finished out at 20,536. King Dollar right now, you got King Dollar up 9 ticks. You got gold trading up at 16.45. That's up $1.30. Silver's up 6 pennies, out at 31.58. Light sweet crude trading down to 102.21. Not low enough in my pocketbook. I don't know about yours. And so we'd like to see we'd like to see King Dollar get stronger and somehow light sweet crude get weaker out there. 877-927-6648. Again, if we just take a look at those sacred geometry numbers, take a look at the low that was put in here at 9:30 Sunday evening, and take a look at how the ES Mini trades up to a high at 5:30 in the morning, gets up to 1378.25. It does a normal breathing pattern, a normal retracement. You can see this thing is retracing to the 0.786s. So you don't see 618s on here. If you're trading the ES Mini, you'd be paying attention to the 0.786 retracement levels. In this case here, you can see retraces back to the 0.786 area before it takes off. It does a little A to B equals C to D. You're always doing those patterns. Let's just take a look at that. See how price was moving along that axis. Look at that. Price moving along that axis on this C to D, moving on the inside, tells you it's going to do more than a 1-to-1. A to B equals C to D. What's it do? It gets up and does a little bit over the 1 to 1.272, which was at 1381.54. It finishes that breathing pattern. And then what's it do? Come into the close yesterday. Coming into the close, swooshes down into the 0.786 retracement level. Actually completes that at 7:30 last evening when it got down to a low of 13.75 and a quarter. So it does another 0.786 retracement. You can see here that in the the early morning session, as you came into 5:30 this morning, you had the ES Mini trade up to a 0.786 retracement of the high that was put in yesterday at 2:30 in the afternoon, and now it's moving back down lower. You can see it's done some expansions. It did a 1.35 expansion off of this set of swing points here, which was at 7:30 last evening into the morning session here at 4:30 this morning. Now 1.35, that's not a number, but that's close enough for me to 1.272. So it does a 1.272 expansion. This morning here, it's just done a move. It keeps trying to punch through this 1475 area where the ES Mini closed out at the session on Friday. Folks, there's reasons why you want to have a line drawn across that area. I will tell you, and my clients know, you want to be long when the market is trading above that area, and you want to be short when the market is trading below that area. Now, not a quarter or not a half a buck or something like that. You know, you got to give it maybe a couple of bucks on either side. Let's go take a quick peek at let's go around the world here. We've got about just about 10 maybe 20 seconds. We're taking a look at the DAX here. Take a look at the DAX. This shows the uptrend channel that the DAX has been in, going back off of the lows of November 25th. You can see what the DAX has done today. The DAX has tested March 7th. You know, March 6th was when we put in our low here. The DAX put in a low at March 7th. I don't have the volume, but what you can see is the DAX, even being down 76 points right now, is rejecting that March 7th area. Something to think about. When we get back, we'll go see how these markets are going to open. 877-927-6648. We'll be right back.
It's always better when we're together.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. You got the Dow down 13 points right now. S&P's up a point. Composite up 4. Small caps up half a point. Microsoft up 3 ticks. Intel up 3 ticks. Google up $2. Cisco up 6 cents. Trading out at 20.02. Apple in the lead dollar-wise on the way up. Apple up almost a full percentage point, up $6 right now, $5.60. Traded out at $6.40, $1.80. You've got Baidu following right behind. That's up $1.20. That is trading out at $1.50. You've got XRite, XRIT, ticker symbol on that. That's up $1.55. Amazon right behind that, up $1.53, trading out $1.93. You've got Cree, CREE. They're up $1.33. That's everybody that is up over $1 on the way up. That's what's moving. Now let's go take a look at what's grooving to the downside. Grooving to the downside, you got ViroPharma, VPHM. They're off 18% this morning. We're absolutely going to take a look at that stock. That's trading down $5.32. You've got Randgold. Remember gold, GOLD, that's a ticker symbol for Randgold. They were up yesterday. They are down today, down 2% off $1.70. Sony Corp, SNE, they are pulling back down $1.56. Trading out at $18.54. Home, Inns, and Hotels, HMIN, they're off $1.28. You've got Gas Frac Energy, GSFV. They're off $1 as well. That's all the leaders on the downside that are down $1 or more. 877-927-6648. Let's go. What should we go take a look at first? Let's go take a look at some of these. Let's go take a look at this ViroPharma, see what that is doing here. VPHM is the ticker symbol on that. So you can see how that has gapped down this morning. And let's see where this thing is headed to. Let me see what was the news release on ViroPharma. Plans to file complaint seeking injunction to set aside FDA approval. So, okay. So that is not. Now, take a look at the volume. We've been trading for 6 minutes here, folks. 6 minutes. The volume coming out of this, 2.6 million shares. And where's this coming right back to? It's coming right back to the breakout area. Now, it's too bad that it's coming back to its most recent breakout area from December 14th. You know, part of the email that I sent out, or that Mike, that we sent out here at TFNN yesterday, and you absolutely should go find that if you are a TFNN subscriber. You should go find that because I also talk about how to buy a breakout area. And the next breakout breakout. This is how not to buy a breakout area here, because you want to see a stock coming back to the breakout area on lighter volume. And where this broke out, folks, was December 14th. You had some wide price spread. You absolutely want to see wide price spread. In this case here, that's a long green candle. You'd love to be able to see it have wide price spread and close towards the top of that candle. In this case here, you actually had a high out here on Pharma on December 14th. It made a high at 28.34. It closed out at 27.80. And so what you can see, and it started off the day at 23.35. 23.38 is where it actually opened. You did 4.8 million shares when it broke out on that day. Look at what you have done today. You've already done 2.8 million shares, and you've only traded for 7 minutes. So this thing here, you can see how things come back to volume. Remember I said when you take a look at your fears, maybe indecision, you're just simply, you're not going to drift your way up to the top of the mountain. Now, price inside the markets can drift their way up, but when they do fall, they're going to fall back to an area where you have support. And this support here, this is not all the yous and we's and us's out there that are buying this. This is where you've got some institutional folks that have stepped in on this equity here. And so if they stepped in on this equity, they are the ones that are going to help to support it on the way down. But take a look at this thing here. You've got two gaps. You had a little bit of a gap down yesterday, and you crossed through a B point. Now, when you did this, you crossed below this B point here. I'm using that as a swing point of March the 7th. The low was 26.68. You did 3 million shares. Yesterday, you actually gapped down, and you got to respect those gaps. You only had 1.1 million shares, but where you closed was 28.61. You closed below the low of that swing point. When you close below of a swing point, what does that say you're going to do? I'm going to just put the line up here. You know, even though you closed just a few pennies below it, when you do close below a swing point, it says you're going to go down to the next area. Well, the next real area of swing points here, you know, you could easily say where that's going to come back down to, more likely, is back in the August 9th, 2011 timeframe. Now, let's just pull this thing back a little bit further. Look at this thing here where it broke down from a volume standpoint. This would take you all the way back down to $7 into the February 09 timeframe. That is on Pharma, and wonderful how in the first part of the show I talked about how stocks will pull back to volume areas, and there is our first one right off the bat. We were able to take a look at that. You've got Priceline now leading the charge on the way up $7, $8 here, leading the charge on Apple. Let's go take a quick look at Apple. What would it be like a day without an apple? I love apples. In this case here, you've got Apple up over the highs from yesterday. Yesterday you had Apple. Let's go ahead and expand this chart out here. It'll be a little bit easier for you to see. I can see it. But if we take a look at Apple nonstop on its way up to $2,000. Actually, I have no idea where Apple's headed to. I just know that it's headed north, which means higher in price. Yesterday, you got up to $639.84. You're trading down at $642.67 right now. And so that is putting some juice inside the NDX. Let's go take a look at that index out there. Let's punch that up on the screen here. Indexes, there we go. And let's go take a look at the NDX 100. And we take a look at the NDX 100. Now, this is the interesting thing about the NDX. And there is a sign out there. So, you know, don't get too exuberantly excited about the market. I do expect the market to bounce today, by the way. And when we take a look at the NDX 100 here, what we're looking at is we're taking a look at March 28th. The NDX, as it's making its high was up there, let's see, was the 28th, in fact. It got up to a high of 27.94 even Steven. So it gets up to 27.94 on March the 28th, and what does it do? It creates a bullish engulfing candle. Now, the NDX on this leg up here, if you take a look at this nice angle, looks like maybe a little bit more than a 45-degree angle, but you take a look at this trend line that we have out here, and that's going back into the December 19th time frame. Along this trend line here, you've made several bearish engulfing candles. And what has happened all along the way is the first one out here is on December the 28th. Makes a bearish engulfing candle. The support on that would have been the low, in that case there, 22.6222. And guess what happened, folks? It never got down and broke that area. The next time you see a bearish engulfing candle up here, January 9th. Here's the low out here. That low never, as you can see, if you're taking a look at the crosshair on my cursor here, that low never gets attacked. Here's another bearish engulfing candle on the way up. January 26. You take a look at that low. The low got attacked, but it closed back up above it, so it never truly was violated. You want to take a look at the close on these. Here's another bearish engulfing candle. Right here, February the 15th, you can see that low maybe gets just slightly attacked, but you get a close above that. Where is the next bearish engulfing candle? Oh, that happens to be the one that came in on March the 28th. Now, that March the 28th candle is the first time that we saw a close below that. That close came in on April the 4th. That, folks, in my opinion, is sending us an absolute signal here. You're going to want to watch the volume now on this move, because I think what you may more likely be setting up is the B to a C of an ABC down. We'll know that when we take a look at the volume. You also had yesterday where the NDX closed below that bearish engulfing candle. See, this one here only lasted for one trading session, because on Thursday, the market was able to push back up over that support area. And then yesterday, boom, it moves down, it closes below it. Today, we'll see how it handles it, because what happens here, folks, is a support line when you are down below it turns into resistance. So you're going to be wanting to watch how the NDX handles the price point of 27.5497 to the button. Let's go take a look at what's going on in the currency market, because let's start with King Dollar, because it really is understanding the currency market to understand the direction that this market wants to trade in here. You can see King Dollar had made its move up here, made a 0.618 retracement. The retracement there that I'm talking about, folks, is the retracement off of the highs here from March the 15th all the way down to the low that was put in when it created that bullish engulfing, that 5-candle bullish engulfing candle on April the 3rd. That retracement level takes you right up here to the 0.618. It is normal when you do a 0.618 move to do what? To get off the elevator, come over here to the TFNN offices, knock on the door, walk right through it, ask for Tom, ask for me, because we want to give you a hug. And we give you a hug, and then you go on your way. That means you leave Suite 618, you go back downstairs. That's exactly what is happening here right now with the dollar index. The dollar index actually trying to pull back. Now, if the dollar index blasts through this 0.618 area here, you're going to see some real price destruction in the market. It would be normal now, after doing a 0.618 retracement, to do what? To do another 0.618 retracement, this one to the downside. That 0.618 retracement would take you to 79.40. What you can see that it's done, let me just go ahead and get rid of some of this out here. Let's get rid of the clutter in our life, and that means the clutter on my charts. Let's go ahead and pull this back, make it nice and wide. Now, we're going from the low down here of this bullish engulfing candle on April 3rd. That low, 78.79. We're going all the way up to the high that was put in on April the 6th. That high up there at $80.38 ticks. Now, a normal retracement, just the simplest normal breathing pattern, folks, is pulling back to the 0.382 area. Well, what did the U.S. dollar index do this morning? Now, 0.382 would be 79.77. What did it actually get down to? 79.78. 1 penny away. Here, I'm going to take some change out of my pocket. I'm going to give it that penny. 1 penny away. So it's normal. Now it's got a little bit of indecision. What is the U.S. dollar index going to do? Let's go take a look at the intraday chart. Let's just punch down here to the 10-minute chart. Let's see if there's any ABC patterns that are setting up here in the U.S. dollar index. Well, I see one. How about you? I see one starting right out here where it made its high, that $80.36, looks like 80.36 area. That's going back to 9:30 in the morning on April the 5th. Well, I could take a look. There's a number of ABCs. I'm going to take a look at this one here that starts there, goes down to the low that was established here at 23.10. That is 11:10 p.m. on April the 9th. That was last night. And then it moved up. It did a 0.618 retracement. So now what you're taking a look at, right? We opened the show. We were taking a look at that tool where the light bulb went off in Tom's mind. That's an email that was sent out so that you can take a look at that. You want to understand this portion of the patterns of the ABCs. In this case here, you do have price moving down on the inside track. If it does continue to move down, if you are on the inside track, what's that going to set up? That's going to set up more than a 1-to-1. Again, we're just looking at a 10-minute chart here, folks. A 1-to-1 is going to set up more than a 1-to-1. A to B equals CD down. That would take the U.S. dollar index into the 79.45 range. Does that make sense to you? It makes sense to me. Why? Because take a look at this volume you had out here going back to 220 on April the 3rd. Look at that little volume bar that sticks out there. There you've got a breakout area. That is on the U.S. dollar index. So let's go we took a look at the king. Let's go take a look at the queen, see what the euro is doing out there right now. The euro now, has simply pulled back. If we take a look at the retracement, we showed that ABC down, right? This is the 10-minute chart still. We showed one ABC up. We showed one ABC down. Now, I don't see an ABC up pattern here. All I see is just a simple retracement. I see a candle pattern that I don't necessarily like, because this suggests a reversal. When I say I don't like it, that's really not what I meant by it. I see a candle pattern that shows a reversal signal. That is this candle pattern right out here. Now what you've had is you have a retracement. Let's see where on the 10-minute chart the euro has retraced back to. Oh, my goodness. How did that work? It came and visited us here at Suite 618. That point 618 you can see right here. That's this red line. Looks like it's about 130.084. It closed really right there at that number. It closed at 130.088. Yes, it moved down a little bit further. Now you can see the euro trying to move up off that area. If you do, now that could be the ABC pattern on the 10-minute euro that is setting up here. If you were to draw that pattern, you'd want to draw that in on your charts. This is what the A to B equals C to D would look like. That would be quite a move. That would take the euro up into the 131.084 range. I think it's 131. No, it's not 131.084. Looks like it's 131.604. That's the number. Absolutely. That is the number. Let's continue taking a look at these markets here. Let's go take a look at something that is popping out here. Other than Priceline, other than Apple, how about Interoil Corp, IOC? That's the International Olympic Committee, isn't it? That's what I always thought IOC stood for. But no, it stands for Interoil Corp. So let's go take a look at that. It is trading up 6.5% this morning. No news that I see out on that. Let's switch over here. Let's pull up that chart. As soon as I can find there we go, IOC. Let's see what they're doing. IOC trading out again at 55.93. So it does gap up this morning, but let's take a look. Well, we were going to take a look at that chart. Let me pull that chart back up here, IOC. So let's pull up IOC, see what they are doing, if there's any candle signals out there that we have, if there's any ABC patterns. Well, we do see one pattern out here. We see one candle signal. That is this candle right here. Looks like this may be a hammer candle. Maybe a little bit too much of a body there to actually be a hammer candle. You did come down with volume. You'd want to see that low tested on March the 30th. Did 2.6 million shares, low of 47.02. You'd want to see that area get tested, folks. 877-927-6648. Dow's off 17 points. S&P not down a full point. We'll be right back.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. 877-927-6648. Again, stay tuned today. Following this show, you got Tom and I doing the Money Masters show. Then we go all the way out to Santa Fe, New Mexico, to Kate Stalter for the Small Cap Roundup. And then off to Chicago, we go up to Victor Jones, who is going to be doing the Option Hour. And then from 3 to 4, all the way back out to sunny California, where we'll go visit with Ken Shreve as the warm-up band for the Tom O'Brien Show from 4 to 6. And so talking about small caps, let's go take a look at weakness and strength in the marketplace. Let's see what we have going on out here. Now, I just simply have the 5-minute chart. That's because we're only 25 minutes into the trading session. What I'm doing here, I've got the IWM, I've got the 5-minute chart up here, and I've got the most recent swing point. Now, I'm just using the exact swing point that came in here at 11:20 yesterday morning. It got down to a low of 79.85, and you did 1.4, not you, but the market did 1.4 million shares. Now, what you can do is you simply, I've got that line drawn across right here. You can see how that area was tackled in the last 5 minutes at 9:55. You actually closed out at 79.85. Remember that swing point low there was 79.85. You closed on the number, but take a look at the volume that you came into it with. Slightly higher volume. You did 1.53 million shares versus 1.43, so an extra 100,000 shares. But the candle before it gave it away. It said, hey, I'm going to absolutely go test this area because it was coming down with 2 million, a little bit over 2 million shares. You can see how you did close below that. We'll see if this is going to reject this area because you did close right on that number. That is on the small caps. You close below that. That says you want to go to a lower price in the IWM. Now let's go take a look at Strength in the market. The strength in the market would be the Qs. Let's go find the Qs. I think I did this. I didn't do it, so we're going to do that live out here. So now we're going to take a look at the swing point on the Qs. Well, that swing point would be all the way down here. This is going to be, we're going to use the lowest low of the 5-minute sessions that we're taking a look at. That was at 9:55 yesterday morning. Let's just go ahead and draw the line out there. We can, since we haven't even hit, I'm going to draw the top of it. We'll put the top line out there. That number is 66.91. You did 1.1 million shares. Now let's just simply take a look at the retracement that could take place. We'll go from the low of that swing point all the way up to the high that was put in here at 3 p.m. yesterday. What you can see is all that it has done is a 0.382 retracement. The 0.382 retracement would take you to 67.20. So it has quite a bit of ways to go on the strength. The question is, who's going to win here? The strong hand or the weak hand? And the weak hand is looking for that strong hand to fail, because that's the IWM, because then you would find lower prices. But you can see here in the Qs, and it is all about stocks like Apple, like Priceline. Two of those being fairly decent weighted inside the Qs, and those are the $2 leaders on the way up almost a full point today. So now let's go take a look at the S&P out there. Let's go see what the SPY is telling us as it is trying to come down and test its swing point low. It did that this morning. You take a look at the swing point low yesterday, came in at 9:55. The low out there, 137.84, only does 2.4 million shares. Now, when you came down and you tested that this morning, you got down to a low of 137.84. 137.84 going against 137.84. You had 2.4 million shares when you came down this morning. You came down with 3.2 million shares. You did bounce up. To me, that says it wants to be tested again sometime intraday. Folks, you are just simply remarkable, and you can do remarkable things. Just get rid of some of those enemies like indecision, and you will be just great. Stay tuned for Tom and I. If not, have a great morning. I look forward to seeing you tomorrow at 9 a.m. sharp. Take care, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.